willing to buy above this bar. It got really big. I was hoping for it to close around here for a double bottom after a gap down, but it got much bigger. I think in a normal situation, it'd be too big to buy above, but because we have targets above, I think it's reasonable. I had to trade small because my risk is pretty big, but I think it's okay despite the big body, or despite the big bar. Because of the big gap down, we have yesterday's close, moving average above, and last week's low a little bit higher. So for those reasons, I think it's okay to do it, but it is buying pretty high, so if it doesn't look right, I'll have to exit pretty quickly. Got filled there. Last week's low is at 387.15. Looks like we're accelerating up. Not sure if last week's low is the target, but moving average seems like a likely target as well. Yesterday's close, moving average. I'm gonna exit 4 shares at, I only traded 8 shares there because that's already $15 down here. So 8 shares, I'm gonna get out 4 at right below last week's low. But I don't know, I can't see this stopping at last week's low right below yesterday's close and the moving average, so probably going higher than that, but just in case. If this bar doesn't fill me and closes on its high, then I'll remove the order and just stay in. Looks like it's probably going to close on the high. I'm going to raise my order up to yesterday's close and exit the full thing there. I think that increases the chances that we're probably going higher. The 2 consecutive bull bars. For now, we're stalling at last week's low. Just got through it now. See if we get vacuumed up to the moving average and yesterday's close. Probably buyers below here if we do get there. So I think we're probably going higher. Because I didn't enter full size here, considering buying just 5 more shares at this low because I think there's buyers there. And I think the probability is much higher now than it was down here. So now I'm into my full position. Well, actually, I'm risking $20 here, and I'm willing to risk 30. So I have one more ad down here, but I'm hoping it doesn't have to get to that. We should get a second leg up from this 2-bar breakout. So I think even if we pull back for a bar or two, I think we'll get a second leg up. So it looks like I was a little bit greedy here, not exiting at last week's low, because it looks like that was the top for now. Still think we should get back above that low, because I think that's a good buy. And I'll enter my last shares. Ideally 20 cents below this low. Sorry, 40 cents below this low. And moving my target to the low of this bar. So I added my last bit of shares there. And so I added my last bit of shares there. Ended up exiting back at that low. So made about $6. I guess I was a little bit greedy there. I know when we break out of the tight trading range here, if we get a double bottom bull flag on the open, there usually is a decision bar here, breakout follow through. But I just thought these targets were so close that it was worth waiting it out. And normally, obviously, I think today's unusual because we got a deeper pullback than what was likely, and that created a second leg down, which ended up drifting down to a full double bottom here. But normally, even if we pull back here, we usually get a new high. So I was still counting on that, but once we got this bar, I thought that changed the odds. And that's why I decided to exit at the low of that doji there. So still, I think good management. I don't know if I needed to add again here because I was already long at that price, but I wasn't in full size, so I did want to get in full size, and ended up exiting up here. So decent trade overall in terms of management. Had I exited half at last week's low, which was my initial plan, I changed it because of the strength, but had I done that, I I would have made a little bit more because I would have been able to add more down here. But overall, I'm still happy with the trade. Now here's an opportunity to redeem myself from the other 2-bar breakout that I messed up. So let's see if we can pull it off today. 2-bar breakout below this low. So breakout and follow through. Probably going to get a second leg down. So same premise, but I think it's a little bit different context because the measured move down of this is much further below. I'll show that example. I think we're probably going to pull back here. But even if we do, I think we'll get a second leg down. But today, I'll be much quicker to exit. I won't allow it to get all the way to my stop. My stop's up here. So sold 5 more up there. And I'm going to exit above this bar if it closes on its high. I think this is probably not the low. But again, I want to minimize losses. So I rather miss the trade and exit and try to get back in if possible. Set my order out to exit above the bull bar. So I ended up getting around my first entry. Didn't make much on it, probably broke even because I traded 10 shares here and only 5 up here. That's actually just because I got nervous. It should have been 10 and 10. But the nerves got to me, so I traded smaller there. It actually makes more sense to do 5 and 10 because this is a better entry. So this is the example I was referring to, this 2-bar breakout here that I thought would have a second leg down. Here I sold above 20 cents above this high. I think I sold 20 cents and 40 cents above, pretty sure. Or actually, I sold this high and 20 cents above, thinking that we'd get a second leg down or at least test this close. I think on this day I was looking for a second leg down to a new low. But this, I think the context is different because we're in a bull trend here, which you can't see on the screen. And we've already reached the measured move of this entire failed bottom. Whereas today, it's a rally to the moving average and then a breakout. So a really strong 2-bar breakout. We're not close to the measured move of that breakout point. Now, I don't know if we get there because we're getting some good buying pressure here, but I think this is a breakout of initial rally with room to go, whereas that one looked like a completed breakout, like a vacuum test. This does not look like a vacuum test simply because it's not as big, as aggressive, and because we haven't reached a measured move target. So it could be something on a different time frame or with a moving average on a different time frame. Or sorry, a larger moving average, like a 200 or 50 or something like that, but I can't really think about all those things at once when I'm trading the 5-minute chart. So I just know that this doesn't look as climactic as this, way bigger than all the bars before it, and reached the measured move target and in a bull trend. So the context, I think, is different here for a second leg down. It was tough to put my stop loss above the bull bar, even though it didn't trigger. It was a 7-bar bear microchannel, 3 really good bear bars, so probably sellers above. And if my premise that this is not a climactic vacuum test of support and that we should get a second leg sideways sit down to test the low close, if that's true, then there should be sellers above here. So it was tough to convince myself to do that, to put my stop loss up here. But I wanted to make sure I didn't take a full loss, so still sticking with the theme of not taking full losses and being very aggressive. I would have pretty much been break even on the second entry and lost probably $8 on the first entry. So relatively manageable loss for a pretty decent premise. And I knew that I could always add again if I needed to. If we pulled back here, formed a low 2, I could add. Or if we got a bad follow-through bar after the bull signal, I could sell above. So I thought there were many ways I could re-enter if necessary, but I'd rather focus my objective on, or my primary objective on minimizing losses and not taking full losses. So I think I did that well, and I convinced myself to exit there. Luckily, did not get filled and collapsed down to the low close, which I think is I wouldn't say common, but I think it happens often enough that you get a big bull bar with a really tiny tail on top, and bears sell it right away, and it never triggers. So I knew that was a possibility, and that's why I didn't exit at the midpoint. I left my target down here because I thought that often happens before the second leg down, is that we just don't trigger the buy. So I think I mentioned in another video that when you get a 2-bar breakout, we often eclipse the second bar and then pull back to the low close or a new low. And that's what we did here. Just eclipse the second breakout bar and then pull back to test the low close. So I didn't make anything on that pretty much. I think I made $1, but happy with the management overall. I haven't been able to explain my thought process during these trades because I have construction going on, and there aren't many moments of quiet where I can be heard. So I just decided to just take them on camera, recorded, and then explain them after the fact. So here, this one is kind of dumb in hindsight, but I thought we were getting a reversal day. We formed a bigger double bottom here, and we ended up. I thought this was a potential double top, and we got a really strong breakout, 2-bar breakout. So I thought we probably can get a higher low and a second leg up from it. But it's also a parabolic wedge. I acknowledged that it was a parabolic wedge at the time, but it was a 2-bar breakout here, so I thought probably wasn't a good short. And so I didn't short there, but I decided to buy 30 cents below. And it quickly collapsed through that entry. I thought I'd probably be okay by keeping my stop down here, but again, decided to exit early. So instead of selling below there, because I thought we might reverse up immediately, I sold 10 cents below that low and got stopped out pretty much at the low tick. So I lost $6 there. So I lost pretty much what I made on these 2 trades. And then once we got the doji here, I thought this was a reasonable sell below this low. And once we got back above the doji, I sold 20 shares and scalped out with 40 cents back when we got back below this low. So now I'm up $8. But this one was tough. Like, it's clearly a parabolic wedge. Maybe I don't take that buy. But at the time, I thought we'd reverse straight back up to that low and get a second leg up. So unfortunate that it got stopped out here at the low tick, and it did eventually get back up to all these targets that I had. But probably should have let that one go. And this one I'm okay with. If I didn't get filled down here, I would have exited above this bull bar. So that would have been a small loss if I didn't get filled. I just sold this high. We had a wedge bear flag here, got a strong breakout to the upside. Pulled back to the high, kept the gap open, got a second leg up. So it's a low 5 type setup. No good signal bar here, so might need to get one more push up and then a reversal. But I think we should get a swing down for a couple legs, either on the next bar or at least soon. My stop is above a measured move from the entire wedge bear flag. So because the gap's open, I thought we might get a measured move up. But I think that's less likely. More likely we reverse down in the next couple bars. So I traded small here on my first position. I was hoping that we got a bar closing near its low, but instead we got a bad high one, so I decided to sell above it. We should get back down to this bad high one here. So I think that's the first reasonable target. Second reasonable target is the moving average, and finally the low of this final buy climax. So it's kind of like this. Wedge bear flag here, strong breakout, pull back, kept the gap open. Got a second leg, but here we needed one more leg up before starting to swing down. Also today we have much more selling pressure than we have here. This is a very tight bear channel, or a tight bear flag. This one has much more selling pressure on the way up, so I think increases the likelihood that we get the second leg down. We get the swing down. So here we had the 2 legs up, and now we're getting that third push up, which is equivalent to this third push up here. So if we get a sell signal, I'll sell below it. But I think that's where we are right now. If I'm wrong and we accelerate up, then I'll stop out above 389 for a $10 loss. And despite these two strong bull bars, I can't really exit up here because the probability of a pullback increases as we rise in price at this point, given the context, I think. So this is one of those where it's harder to micromanage. Like here, buying above here, if I sold here, that makes sense because if we do trigger the buy, we could get a break from the wedge. So in those situations, it makes sense to exit quickly. Here as well, it could be a reversal day. So if I exit above here, I could avoid a big loss. Here, I already anticipated that this is possible to the upside, so I can't really exit now after two good bull bars because I knew it was a possibility, and the probability of a pullback is higher now. So I have to respect my stop and wait for the pullback to start, which I think is still likely. But obviously, the closer it gets to my stop, the lower my probability becomes. We're still here. 2-bar breakout. We could easily just relentlessly go up and stop me out, but I think we should start to go sideways soon. So that's what I'm anticipating here. I'm not expecting it to be exactly like that. I don't think that's how it works. So I don't think we need to get a signal bar on the next bar, but I think this breakout, the reason I'm showing that is just to show that I don't think this breakout is enough of a reason to exit. If this stays like this, it'd be an II sell. So looking to sell below there. If we go above, probably a final flag. So if we go above and get a reversal, I'll sell below it. There's a 6-cent slippage there. So I ended up getting filled below, but got pretty big slippage there. I had my initial sell stop to sell below this bar, which was at 388.02. So I had my sell stop at 388, but the low of the inside bar was at 388.03. So I was 3 cents below that. And, sorry, just lost my train of thought. Moving average is above that bad high one, so I'll try to exit at the moving average. Should get a couple legs down to the moving average from here. What I was saying is that the low of this bar was at 388.03. I left my sell stop at 388, which I normally do have it 3 cents below, so that's fine. But then I got filled at 96, so I ended up getting filled 7 cents below the low of that bar. We'll probably get a couple legs down, but I don't like the size of the tail on this. Just get out the rest there. Didn't like that big bounce. Definitely left some money on the table because probably about $6 or $7 I left on the table if I had scalped out the whole thing at the bottom of this buy climax, but I thought we'd get to the moving average, and we still probably will, but I didn't like the size of that bounce. So at 16.50 now. Ended up working out, I think the targets changed from this bad high one to the moving average because the moving average drifted upwards, but I didn't expect to bounce that strong. So you could argue still sellers above there, so probably still okay to be short, but I'd rather see bars closing near their lows, especially when the channel up is so tight. So here's another example. This is February 23rd of this year. So tight bull channel, bear flag, wedge bear flag. Instead got the upside breakout, 2 legs up, and then bear signal. Not a great one, but 2 consecutive bear bars, and we ended up getting at least 2 legs down. But this bar here closed on its low and below the buy climax, so getting bars closing on their lows. Here we had a huge tail, so I think I'd rather look for something else rather than hope for it to come back down. I have an order to buy here for a wedge bull flag. This bar's a little bit big, but I think strong rally, and we got a good signal bar here on the third push down. I'd like to see us a close above the moving average. Very nice breakout so far. I'm going to take 10 shares out there, but I think definitely worth holding for a swing based on that strength that we just saw. And at this point, it's a break-even trade. So even if I get stopped out, I'm thinking of getting out 5 more here, but I'm thinking it's so strong. Why take shares off when we're getting a strong breakout from a bull flag? So 5 more shares off there. Only 5 shares left. I'm not sure about this management, to be honest. Obviously a very good trade, but the surprise breakout is confirmation of the signal bar. So if I wasn't going to scalp everything. I was hoping for a close above the moving average to see if we can get a swing up. And I think this surprise bar is confirmation of the beginning of a swing. I don't want to say swing. I mean, it's a trending trading range day, so maybe we get up to this high or the high of day. But clearly a very strong bar. So why am I out 75% of my shares already? I've been doing that for a long time, and I notice it every time, but half the time it just reverses back down. So I end up ignoring it. But every time I do it, I think it that this is clearly confirmation of my buy here, and this is exactly what I was hoping for. Considering getting out on the close of this bar, probably buyers below, but already a really good trade. So really strong bull trend, really strong breakout though. So probably always in long and going higher, but also within the context of a trending trading range day. So I'm not sure how much higher. Damn, my best day. That's my first 30 plus day ever. That feels good. Here, I was still, after this big tail on the bottom and I exited, we ended up getting one more new high, but I still thought the consecutive tops were still in play. So once we got the second consecutive bear bar, I sold below it. But then I thought, we're too close to the moving average. We're probably going to get 2 legs down, but this first leg is too close to the moving average. So I just exited with a small, I think like 5 cents. And then once we got 5 consecutive bars down in a micro channel, I decided to sell in the upper half. And once this bar became a surprise breakout, I exited around break even with a small loss. So I think I made $1 here, 5 cents on 20 shares, and then lost 20 cents or 15 cents on 20 shares. So I ended up losing $2 throughout these 2 trades. And then obviously this one made a big chunk.